please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the top story at this hour, and this is a CNBC TV18 exclusive news break. The prices of petrol and diesel are at an all-time high in India, and that continues to be a cause for concern. Global oil markets are cheering the United States, holding back on potential trade sanctions against China. This, coupled with robust demand, is keeping oil prices higher. Let's take a look at how the Indian crude oil basket has surged in the last few months. Currently, one barrel costs about $72. This was at about $56 on an average during FY18, and in FY12 this was at $112, and from then on it has steadily decreased. But now we are seeing a reversal. Sources tell us the government is working on a comprehensive plan to ease the burden on consumers. Before we bring you that exclusive news break, let me first go across to Prashant Nair, who's standing by with a breakup of the cost of petrol and diesel. Prashant, crude oil is pinching our pockets, but taxes, I mean, that is really what's hurting us, isn't it?
You know, I've come back to this table and these numbers and how the numbers break up a couple of times over the last 2 years. So let's do this again, essentially because what we pay at the pump for petrol and diesel are at record highs. And this even as crude oil prices are nowhere near their record highs. I mean, we've touched $80, which is, I mean, a cyclical high, you can call it that, but nowhere near all-time highs. So let's break this down. You look at the thing to focus on is row number 3 and 4. Excise, which is essentially what the government collects, central government collects, is 15 rupees 33 paise a litre. This used to be 3.5 rupees a litre when diesel prices in Delhi were 59 rupees a litre. I mean, this was in October of 2014. Back then, at 59 rupees a litre for diesel in Delhi, international oil prices used to be $100 a barrel. So look at the stark difference. You look at VAT. VAT varies. I mean, excise is steady across the country. VAT varies state by state. 16.75%, it used to be about 7% or so. So, I mean, even as international oil prices are $20 lesser than, I mean, the point that I've taken, which is October of 2014, what we pay at the pump is at an all-time high. Dealer commission has also gone up, but that, I mean, dealer costs are largely fixed. It doesn't really fluctuate with international oil prices. Let's look at petrol prices and how they are faring in Delhi. I mean, what we pay at the pump is at a record 77 odd rupees a litre. And again, the comparison is the last cyclical peak, which was about 76 rupees 10 paise a litre back in September of 2013. Again, you look at international oil prices, $80. It was $108 a barrel then. Excise, from 10 rupees, it's gone up to 20 rupees. You look at VAT, which is what the state collects, 12.7%. It's more than doubled to 27 odd percent, and dealer commission has also gone up as well. So, I mean, you know, and that's the reason why when you look at what the government is collecting, that has gone up. And that's the reason why the clamor that, well, you know, you raised excise as international oil prices were coming down. You did not pass the benefits on. But now as international oil prices are rising, why don't you pass it on? Can the government do it? I mean, if you ask economists across the board, the clear resounding answer is no. There is no fiscal headroom available. But even leave that aside, leave the macros aside, you look at the micros for oil marketing companies themselves to be able to make marketing margins what they were making pre-Karnataka, I mean, elections when price hikes were stopped. You know, we need a price increase of between 4 and 5 rupees. Not a, I mean, we need an increase of 4 or 5 rupees. We are talking about a cut of whatever 2 rupees, whatever is being talked about, what the government can do. The last cut which the government effected was 2 rupees late in 2017. So I think, I mean, for all practical purposes, this is a pretty tough decision, and that's the reason why we're saying, I mean, it's between a rock and a hard place.
Oh, it is certainly a very, very tough decision and also a very politically sensitive decision. Prashant Nair, I appreciate you joining us. So what are the options before the government to deal with this? Is the excise duty cut the only answer? Sources tell us the government may look at a comprehensive plan, a series of measures to ease fuel prices, to douse the fire, so to speak. In fact, the thinking within the government is believed to be that duties alone cannot be cut in isolation. Sapna Das, who's been tracking those developments, joins us now with the exclusive details. Sapna, you know, what are the series of steps that the government could consider?
Well, what the clear indications from North Block at least is the fact that, all corners covered as far as the oil price situation is concerned. You cannot talk just about lowering the excise duty to give benefit to consumers. So basically 4 things that may have to be kept in mind. Of course, one of the most critical would be holding the level of the rupee. So here the RBI interventions are going to be very, very important. Second, also some kind of a messaging with OMCs or probably looking at the pricing mechanism. Now, of course, everybody is very clear that petrol and diesel are clearly deregulated since a long time. So what is the government talking over here? Probably to some extent or for some time again, OMCs may have to absorb some bit of the price burden, question mark there, but a call will be taken on that as well. And then lastly, coming to excise, that may have to be accompanied by some kind of a loosening as far as the VAT duties are concerned. Now, the question, of course, here is that, the BJP governments may follow, for example, after what the government had done in October last year, October 3rd, they had lowered, excise on petrol and diesel by 2 rupees. So at least some of the BJP governments had followed suit. So what are we talking about here? But 20 of them, 20 states where BJP is in power. So that's not a small number that we are looking at. So the overall comprehensive plan that we have been given to understand is that all levers will have to, work together. The RBI intervention in terms of holding the rupee, because that's a very clear risk. Suppose you go ahead and take these measures, but the rupee falls. Yeah. So even if there's a 2 rupee cut or a 2 rupee holding or staggering of the price impact by the oil course, it'll get washed away completely by the rupee. So that's a very clear concern. Of course, the central excise part, we are very well aware about the fiscal impact, 13,000 odd crores for a 1 rupee cut on excise on petrol and diesel, 26 odd thousand crores for the full fiscal. So the question over there also arises right in the beginning of the financial year, does the government have the appetite for that? A. B, if yes, I mean, the situation is such, they have to take a call, then by when? And how much will be the quantum? So that is how this entire thing is going to pan out. But it's not going to be duty reductions in isolation. That's a very clear message coming from North Block.
Okay, that is the key message. Cannot be duty reduction in isolation. And really, if you even cut excise by a rupee or 2 rupees, is it really going to make a meaningful difference to the consumer feeling the heat at this point in time? That's the question. But here's the Vice Chairman of Niti Aayog, Rajiv Kumar, who spoke to me a few days ago. And his message was loud and clear. The time to consider excise duty cuts is now.
The sowing season will begin again, and the farmers would be using a lot more diesel than what they've done in the past. And I think it's worth considering. So I'm merely suggesting that this is the time, because given the Iran sanctions, I doubt if the oil price supply situation globally will improve any further. And given the synchronous recovery and higher growth globally, and China remaining strong, Chinese demand remaining strong, it may well be a little bit of time before oil prices begin to look southwards. So this is the time, at least we in the Niti Aayog feel we should be thinking of a excise cut, but both by the centre and the state government, and not by centre alone. And because also the latest GST numbers of more than 1 lakh of crores collected in April, and this appreciable widening of the tax base and direct tax base implies that we could have a much better buoyancy in both direct and indirect taxes as we go forward. And so therefore there is fiscal space available for this cut.
Well, that's the Niti Aayog Vice Chairman saying the time to cut excise duties is now, and states must follow through. Joining us now to discuss this further, S.C. Tripathi, the former Oil Secretary, and A. Prasanna, the Chief Economist at ICICI Securities. Mr. Tripathi, let me start by asking you, sir, you've seen prices globally which are much higher than what they are currently trading at. About 80, we've seen prices go well beyond $100 during the UPA's time, sir. We understand the government is now looking at a comprehensive package to try and provide some relief, and that an excise duty cut in isolation is not the consideration. What will be the things that the government can tinker with? What could be those levers, Mr. Tripathi?
Well, in 2013, the rupee had touched 66, 67 rupee to a dollar, and the crude prices were hovering around $114, $120 to a barrel. We have seen those days. And at that point of time, of course, the government had cut down the excise duty. The excise duty on diesel was 3 rupees a litre, and petrol was about 10.5 rupees a litre. Since then, government raised it to 17 rupees a litre on diesel and about 21 rupees a litre on petrol, and has collected substantial amount of money every year, almost additional revenue coming to about 180,000 crores rupees in a year. But I agree that merely excise duty cut by rupee, etc., will not be enough. I think stabilization of rupee is important, and some moderate cut in excise duty as well as that may be required. And at the same time, one should look at the margins that the companies are making in the dealers' commission. And over a period of time, I think they should lay a roadmap of bringing it under GST. Now that both direct and indirect taxes are showing buoyancy, they should lay a roadmap whether in 2 years, 3 years, 5 years, they'll bring it under GST. And when they bring it under GST, what would be effective rate? Whether it will be 28% plus cess to make it 40% or 50% or whatever it is. Because right now, we, among the developing countries, we have the highest prices for petrol and diesel.
Yes, we do, sir. But, you know, bringing it under GST is going to be something that can be explored in the medium to the long term. In the short term, that's not an option necessarily that the government can push through to bring about some relief. But I'll come back to you, sir. Let me go across to Prasanna. Prasanna, you just heard the options that Mr. Tripathi was speaking of. And this is not uncharted territory, and these are not untried methods. These have been tried in the past, especially under the UPA. As Sapna was just reporting, the government now looking at a comprehensive package, a series of steps. What would your take be?
No, first of all, I think a couple of things we have to remember. One is that some level of price transmission has to be there. I think this was one of the problems before the prices were deregulated. That the economy was facing, that the consumers did not get the right price signals, which meant that the demand conditions probably was not getting calibrated in terms of price and supply, right? And of course, that led to issues with the health of the oil companies and the government's fiscal position as well. So there is no doubt that the price transmission has to be there. There has to be a relation with the global prices. Now, second is, of course, I mean, the taxes are quite high. So it's basically when the global prices fell, the government hiked the taxes. So now I think it's logical to expect some reduction in those taxes. But the issue is, I mean, even with those higher taxes, our fiscal deficit is still not under control. It's still about 3%, 3% being the medium-term target. So then the question to the government is if they cut the duties here and therefore the deficit goes up, is there any other place from which they're going to get extra revenues, or are they going to get spending somewhere? I think that is the bigger issue which the government has to grapple with.
Yeah. Absolutely. Whether they will cut spending, which in an election year is going to be a big question mark, and they're hoping that at least from areas like disinvestment, they will be able to shore up revenues and the GST numbers will continue to look better. But Mr. Tripathi, you know, just to pick up on the point that Prasanna was making, that it's a slippery slope. I mean, you know, we are now in an era of deregulated prices. If you want to go back to an era where the government dictates, as it did during the Karnataka elections, and a day after the Karnataka elections, we were back to normal. But, you know, this is a slippery slope, is it not, to go back into an era of regulated pricing? If at all that is the route that they may take. We don't know whether it will be something that the government will finally take forward.
No, one is not suggesting regulated prices. But this is something, you know, the demand for petrol, diesel, etc. is inelastic. And when you have on basic price 100% duty on petrol and 80% duty on diesel, then it is not a reasonable or a very normal duty structure. It is an abnormal duty structure. You are putting it under the same goods. And that is what one is suggesting, that bring the duties to a reasonable level. As I mentioned, our refineries supply to many of the neighboring countries, and all of them have prices much lower than us. Our consumption of petroleum products is 1/3 of world average. China is 5 times us. USA is 20 times. Europe is 10 times. So these demands are inelastic. The modern life is so critically dependent on oil and its products that the kind of life one is expecting will require more and more consumption, at least for the next 10-15 years, unless we are able to make a major breakthrough in renewables and nuclear. So the demand being inelastic, I think there should be some consideration for the level of taxes that are being imposed, and particularly at a time when the prices are going up so high.
Right. An abnormal duty structure that's been imposed on fuel prices in India. But Prasanna, let's talk about the fiscal math, because as Sapna was reporting, a 1 rupee cut could lead to a hit of about 13,000 crores. You know, from a fiscal position, if they do go in for a 1 or a 2 rupee was the last cut that we'd seen in excise in 2017. What could the impact be given where we are today and the challenging macros?
Yeah, that's right. So 2 rupees is 26,000 crore, and that will be roughly 0.15% of GDP. So from 3.3% straight away, then we are looking at closer to 3.5% just because of one duty cut. As it is, we think the budget did not provide completely for a higher MSP or for the new healthcare scheme. So therefore, we anyway think this the fiscal numbers were prone to some slippage. And now if you on top of that, if you add this duty reduction, potential duty reduction also, so then we are probably looking at a fiscal deficit going to something like a 3.6, 3.7% kind of a number, which again, if you look at how the bond market has been behaving over the last few months, precisely because of this reason that the government is not able to meet its fiscal targets, it means it will put further pressure on interest rates, and of course that will have an impact that will have an economy-wide impact.
Well, it is a tough balancing act for the government. It is not going to be an easy one to deal with. But this is a work in progress, is what we're given to understand, that the government is looking at a series of steps, and they do acknowledge that an excise cut alone will just not cut it any longer. Former Oil Secretary S.C. Tripathi and the Chief Economist of ICICI Securities, Prasanna, appreciate you joining us here on CNBC TV18. We've told you that a meeting with Aviation Ministry officials, Indian Airlines had reiterated their demand to bring aviation turbine fuel under the ambit of the GST. Now we have more from that meeting. Ashpreet joins us with the details. Ashpreet, what are you picking up?
Sources indicate that the long-pending demand that airlines have been making of bringing ATF for the jet fuel under GST ambit has picked up pace. In fact, airlines have made another proposal to the Civil Aviation Ministry during the May 17 meeting, which we had reported that ATF should be brought under the GST ambit, should be given the infrastructure status, and in fact should be dealing from all petroleum products. What we also pick up from sources is that during the presentation, the airlines have said that the government will be able to make about 10,000 odd crores if ATF is brought under GST against 9,000 odd crores which they currently make by taking taxes on the jet fuel. Now, what they've also gone ahead and said that if input tax credit is provided after ATF is brought under GST, all airlines accumulated will be able to make about 5,000 odd crores. That's the kind of money they're looking at. In fact, they've said that they're making losses because of higher ATF prices. Remember, 40% of the operating costs that airlines have are dependent on ATF prices. Now, we'll have to wait and see when does Jayant Sinha and his ministry bring the whole saga of whether ATF should be brought under the GST ambit at all or not before the GST Council's table.
Okay, Ashpreet, thanks very much. Staying with the politics of fuel, sources tell CNBC TV18 the Petroleum Ministry has written to the Finance Ministry, the GST Council and the Food Ministry seeking a reduction in GST on ethanol. Currently, ethanol attracts a GST rate of 18%, and in the past, Food Minister Ramvilas Paswan has also called for a 5% tax rate. Petroleum Ministry is also pushing for increased blending of ethanol with petrol and diesel. Remember, oil marketing companies blend up to 2.1% ethanol with petrol. The government wants this to go up to 10% now. And the latest from the US and China and America have agreed to put their trade tussle on hold after spending months threatening to impose fresh duties. Both countries have now agreed to call a ceasefire. Washington and Beijing issued a joint statement over the weekend. The statement highlighted that America would substantially reduce its trade deficit with China. There was, however, no commitment on cutting the gap by any specific amount. According to the U.S. Treasury Secretary Steven Mnuchin, U.S. and China have decided to work on a wider agreement to address trade imbalances.
This has been a trade dispute all along. It never was a trade war. It's a trade dispute on significant issues. Both parties have agreed to suspend the tariffs. Our 150, their 50. You saw in sorghum, they dropped the case on Friday as a sign of good faith. For our farmers, this is going to be fabulous right away. Secretary Ross is going over there. They've committed to 35 or 40% increases in farm products immediately. In energy, I think there's a massive opportunity for the U.S. to become a major supplier of energy to China.
That's big news. Both the US and China decide to put the trade war on hold. And as the tensions between the two de-escalate, it's a sea of green across the US markets. The Dow jumping 300 points at the start of trade. It's now trading over 1% high. The S&P as well as the Nasdaq both trading close to 1% higher. And back home, it was the 5th straight day of losses on the Dallad Street. The Nifty slipping 0.75%, just about managed to keep it head above the 10,500 mark. The mid-caps continued to underperform peers and lost 1.7% in today's trade. PSU banks were the outperformers, with the index rallying 3% led by State Bank of India. This on the back of successful takeover of Bhushan Steel by Tata Steel.